the US has become crypto friendly.
Mm.
It's the green light. So the US will get some regulation through. There'll be a bit of a shit show and debating about it and the usual stuff, but they will get some regulation through, which is the clarity that all of the pension funds need. So they're waiting as well. So there is a lot of buying to come from the really big players who've been waiting.
Bitcoin Zela stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zela today and enjoy the new edge. Raoul Pal breaks down stocks, bonds, and Bitcoin. What's crashing, what's pumping, and where money's flowing next. Let's jump in.
We overlaid the chart of 1997. The Asian crisis was a short, sharp shock versus now it's almost identical. The kind of the 4-month period leading up to it, 4 or 5 months leading up to it. And that was a V-shaped recovery as well, because everybody was caught off sides because they thought the world was going to end. Liquidity came into the system. It was via the Fed that time cutting rates and all the other central banks. And the market just went up in a straight line for the next 2 years.
Man, if it doesn't feel like you've got to price in some probability of that happening right now, I don't know anything, because there is some probability. Like, I was just talking with a few other professionals, and, you know, there are a lot of people that are looking at this like, oh, this rally has gotten stupid. And then there are professionals that are looking at it like, no, this is day one of restocking U.S. equities, day one. You know, and if it is, you got to kind of play that carefully. And in my book, you know, on technicals, we're going blue sky now in the S&P, where it recovers all the major moving averages. And for me, the next target is the old high. So we'll see.
Yeah, it feels that way to me. And I think you're right. There is a risk here that we rerun 98, 99 or 99 because you've just taken all the tail risk. Let's assume that Saudi, the US, and Israel do a deal with Iran. That feels like it's going to happen. Let's say that there will be a ceasefire in Ukraine, and let's assume that the Chinese will come to the table, do something reasonable. Those three things happen. We've taken all of the left tail off the table. And people are going to be like, oh, but inflation's going to come back. And they're going to keep saying that for 18 months, which they kept saying as inflation's fall. So I think it is not a small probability that we have a really blow-off kind of next 9 months or so.
I agree. And people forget that the stock market doesn't mind the battle between inflation, stagflation, deflation, right? When it's a battle and we're somewhere in the middle and we're not redlined to one side, stock market looks at that and says, we're cool. Right? As long as rates aren't flying higher off the handle, the stock market can go on business as usual. And that's where you see trends resume and individual trades develop.
I mean, the last Trump cycle in 2017, where the same thing, the market corrected in the beginning because everyone's fearing tariffs and the same narrative. The Fed were raising rates and doing the balance sheet runoff. And the market screamed higher all year because the Chinese were stimulating, the Europeans had to stimulate. So it feels like, you know, even if the Fed don't do anything, I still think the Fed cut, but let's assume they don't. Well, that's not a prerequisite for the market to do anything. As you said, as long as rates aren't jacking higher, everything's fine.
Bitcoin might be gearing up for its next big move, and the signs are getting harder to ignore. A key metric from Glassnode, the 1-month 25 delta skew, has dropped to 6.1%, showing a clear rise in demand for call options over puts. That means more traders are betting on Bitcoin to go up than down. Right now, about 60% of all BTC options are calls, compared to just 39% in puts. This kind of imbalance usually reflects strong market conviction in an upward trend. The bullish sentiment doesn't stop there. Whale activity is adding serious weight to the rally potential. Over the last 30 days, whales have removed nearly 49,700 BTC from exchanges. This shows they're not looking to sell anytime soon. In fact, inflows to major platforms like Binance have dropped to 6-month lows, signaling a strong accumulation phase among large holders. retail and institutional investors alike seem confident. With net flows remaining negative, fewer coins are circulating on exchanges, reducing sell pressure and increasing the chance of a breakout. If this trend holds, Bitcoin could break past its current range and aim for $107,225. Still, if short-term traders cash out, we could see a pullback to $101,530. The next few days may be crucial.
How crypto is just a macro asset. And it took a long time for people to believe that. They thought it's something different, it's something unique. It's a macro asset. So you apply the same things that I've always used, which is liquidity, business cycle, all that stuff, plus a bit of technicals and sentiment. There's no voodoo here. It's pretty straightforward as an asset. It's just more volatile. So it's harder to deal with. But you were right. What I was seeing was like the liquidity indicators like Global M2 had stabilized and started going up. It leads Bitcoin. Bitcoin was following it almost perfectly. So I was starting to look for the bottom. Then I start looking at stuff like, okay, where's sentiment on NASDAQ? Because it's tech stock, same thing. It was in the gutter.
Right.
Sentiment was the worst I had seen since COVID. And that was across the board, across everything. Even hedge fund long short, everybody was max bearish. And I'm looking at liquidity. It's going up. I'm seeing the market getting fearful over a narrative. And I'm like, well, what is the likely outcome here? Are they going to have 150%, a trillion percent tariffs on China? No, they're going to reach something normal. So you've gone from peak headline fear to things could only be better from here. So for me, it was like a no-brainer of an opportunity, both in tech stocks and in crypto. And so going forwards now, normally speaking, this is the period, my framework is about, them rolling the debt and having to provide liquidity to do so. And so what we've got is a lot of forward-looking liquidity coming out of whether it's the weakness of the dollar, whether it's other countries using their balance sheets, a number of different mechanisms. And all of that to me is suggesting that the rest of this year is going to be very strong. And I was kind of thinking the NASDAQ was going to be a V-shaped recovery. And my God, it was a V-shaped recovery. And people are still underweight and short. It's like, it's a hell of a setup.
XRP is starting to outshine Bitcoin and Ethereum, especially when it comes to speed and cost. Crypto expert All Things XRP recently highlighted just how efficient XRP is, calling attention to its nearly instant transactions and minuscule fees. Each XRP transaction costs just $0.02, and that fee stays flat even during network congestion. Whether the price of XRP is $0.50 or $1,000, the cost to send it barely changes, giving it a huge edge in reliability. Unlike Bitcoin and Ethereum, XRP doesn't rely on miners or block competition. It uses a consensus mechanism, which allows transactions to confirm faster and without added fees for urgency. This system means no one has to pay more to jump the line, and it's especially attractive for businesses that need fast, predictable transfers. On top of that, every XRP transaction burns a tiny amount of XRP minus 0.00001, removing it from circulation. This creates a natural, slow deflation over time and helps deter spam. XRP can also handle up to 1,500 transactions per second, a scale that supports global financial institutions. As companies look for practical blockchain solutions, XRP is standing out. With near-zero fees, blazing fast confirmations, and strong performance under pressure, XRP is becoming a serious choice for large-scale, everyday crypto payments. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zela for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.